The material wealth of a society is ultimately determined by the productive capacity of its economy, that is, the goods and services its members can create. This capacity is a function of the real assets of the economy, such as the land, buildings, machines, and knowledge that can be used to produce goods and services. In contrast to real assets, there are financial assets such as stocks and bonds. Such securities are no more than sheets of paper or, more likely, computer entries, and they do not contribute directly to the productive capacity of the economy. Instead, these assets are the means by which individuals in well developed economies hold their claims on real assets. Financial assets are claims to the income generated by real assets or claims on income from the government. If we cannot afford to own our own auto plant as real asset, we can still buy shares in a company as financial assets and thereby share in the income derived from the production of that company. While real assets generate net income to the economy, financial assets simply define the allocation of income or wealth among investors. Individuals can choose between consuming their wealth today or investing for the future. If they choose to invest, they may place their wealth in financial assets by purchasing various securities. When investors buy these securities from companies, the firms use the money so raised to pay for real assets, such as plant, equipment, technology, or inventory. So investors' return on securities ultimately come from the income produced by the real assets that were financed by the issuance of those securities. Have a look at the examples of real assets and financial assets. Commercial real estate, residential real estate, equipment and software, inventories, consumer durables, these are some of the real assets. Now you may not know what does consumer durables mean. Consumer durable is a good that does not quickly wear out, or more specifically, one that yields utility over time rather than being completely consumed in one use. Items like bricks could be considered perfectly durable goods because they should theoretically never wear out. Highly durable goods such as refrigerators or cars usually continue to be useful for 3 or more years of use. So durable goods are typically characterized by long periods between successive purchases. Some of the financial assets are deposits, life insurance reserves, pension reserves, corporate equity, equity in non-corporate business, mutual fund shares, debt securities.